Could you please give us your view on the international scenario for impact investing and expectation for the coming year?
So first of all, thank you for organizing this week. It's a key week for us since the last 5 years. And happy representing the Italian asset management in this panel. We're talking about impact investing, just a few numbers. It's been the fastest growth part of the ESG space in the last 3 years, reaching $1.5 trillion asset under management. We are very positive and confident that this growth will continue, but the problem is 1.5 trillion is a big number. Yes, in absolute is a big number, but if you look in relative, it's nothing. Less than 1% of the total market. So it means that it's still recognized as just a niche way of investing. I think we have to analyze 3 problems that has been part of this low starting growth for this asset class, and let's try to think how will be the future for this problem. The solution for this problem will clearly paving the way for the strong growth of the impact solution. The first problem is regulation. Regulation was clearly a big problem. The interpretation of the regulation was not easy. We see a lot of volatility in terms, for example, of fund prospectus that was very different in the first stage. We see a lot of volatility in interpretation of risk with a lot of company who decides to reallocate money from Article 8 to Article 9, then back to Article 8, mostly because of greenwashing risk. So this is clearly been an element that we have to analyze. I think this is normal. When you start regulating something that has never been regulated before, you can have this problem. Especially when you start regulating by financial regulators, something that is not, too much correlated to financial number, you can face these problems. But the idea that we have is very clear. This regulation was made 3 years ago. This was part of a big European massive regulation that included the taxonomy. So regulator want this asset class will grow. So we expect in the next future they will show us new rules, will show us clarification on the risk, and we expect the new rules of the games that will come in the next 18 to 20 months will solve this problem, and this will pave the way for a fast growth of the impact investing. The second problem we had is data. We need totally different data from the classic ESG data. Our data are more complicated. Are mostly forward-looking than back-looking, are mostly relating to product than to companies. And I think that we even need new data provider. Try to calculate and to give a value to the impact at social and level, environmental level, is not easy. We saw a lot of new company, mostly unfortunately in the US, that try to fit our needs in terms of data providing. We saw a lot of new companies that create this data from a new way of doing, mostly related to artificial intelligence, mostly extracting those numbers from net with a strong analysis of scientific studies. So that's why I think that those companies are getting bigger and bigger, and that's why I think the solution for data is here. The quality is already acceptable. In the future, we will have more reliable data that will make investors and company more relaxed on our asset class. The third problem that maybe is the most interesting, is the most difficult to change, is how clients perceive this asset class. So they feel that this is just a small asset class that you have to trade, like, for example, bonds or equity, or that you just have to trade. Mostly, I think, because the assets they can invest in is just a few funds, very small, very concentrated, that you cannot invest too much because of the risk of concentration, because of the risk that we said before, greenwashing. This was not why this asset class was built up. I think that you have to start changing your view on impact investing, not consider it more as an asset class, but as a sort of global lens that you have to use when you look at your portfolio. So that in the future, as soon the new rules will come, as soon the new data will be available, I'm sure that the market will start investing in new, very big funds with this sort of overview or lens, which you can easily calculate the impact of your portfolio. So those 3 elements will be a key driver for the future growth of the asset class.
Yeah, thank you. And Stefano, similar question. Now, what distinguishes your investment stewardship and engagement approaches, in particular in terms of decarbonization and climate change risk management?
So given the fact that we're guests of the Italian Stock Exchange, just a few words on the approach with Italian companies. We have been a very long track record in managing Italian assets, more than 30 years. We have so a long relationship with investor relators or with managers of companies. Historically, we just can ask them numbers in terms of financial perspectives. But since we start up with our internal research team, and since we start up with our Article 9 funds investing in Italian equities, we start asking them something very different. At the beginning, it was quite complicated because the measurement of the impact at social or environmental level is not easy. There was a lot of curiosity from company. Our idea is to try to push as much as we can in increasing the positive impact and reducing the negative ones. As I said before, the calculation was not easy, so we made a sort of a stewardship with them, try to make them understand which were our needs. We still want to be very frank with you. I think the approach the Italian companies had on this argument is very constructive. We work very well together. And actually the number, especially for big middle capitalization, are starting to get interesting and I think reliable. We still have some problem with small cap. Obviously, it's a matter of investment. I think that the next solution that we will have, we will handle in the future, mostly related to intelligence, artificial intelligence, will reduce a lot of the cost of having this kind of data. So I'm very proud, being an Italian, of how we work together with Italian companies. About the decarbonization, about emission, we are very strict. We don't care anything about emission in relative terms. So we don't care any numbers about emission on, I don't know, revenues or on enterprise value. What we really want for having a positive impact is the reduction of emission in absolute terms. So this is the only number that we look at. On the other side, we try to do something different from the classic ESG because we want to have to create some indicator that will be more forward-looking than back-looking. That's the main difference with the impact investing solution. So, for example, an argument that we look and the ratio that we start insert in our portfolio is total emission on a CapEx. CapEx is clearly representative the future of the company, is clearly representing where the investment of the company goes, is clearly representing the choice of the management. So creating this kind of ratio, you will have the future looking of where the company will go. So that's very interesting. Try to create something very simple that could be easily understood by companies and by investors. On the climate change, we know that the climate change is here. Even Milano was, unfortunately, very bad impacted in the end of July. And we know that the climate change is here to stay. It's not only a matter of how companies are impacting the climate change, but it's most a matter of how a company will be impacted by climate change. We saw a lot of companies have problems in their business because of their production site being in the wrong part of the world where the climate change creates a big problem. So now everything is clear. Climate change will could have a negative impact even at financial results for the company. We're not the only actor who is asking companies how they face this problem. There are so many actors that needs to have figures on that. Insurance. We saw how liabilities for climate change is growing in the last 2 years. So they will ask the same things of us to companies. Banks. As soon as the loans is made for a company, the banks decide to finance a company, they will have very clear program on this argument. So that's why the most actor came on the stage, try to push company to have a real view on climate change and think that this good. Everybody now clearly understand that climate change control will be one of the driver of the good performance and even financial performance for companies.